Good morning. It is Tuesday, July 20th, and I am Kenny Polcari, your host of the party. This is the morning market commentary, everything you need to know to get started. As you can see, it is another spectacular day here on Nantucket Island. And I should say, for anyone who's never been here, you should get on the next plane and get yourself here. This is a spectacular time of year. It's a beautiful island just off the coast of Cape Cod. It is classic New England. All right, so what are we going to talk about? Yesterday was a tough day, right? Global stocks and global markets came under pressure. Every headline across the globe citing the Delta variant COVID-19 virus as the culprit for yesterday's sell-off. Well, I've got a laundry list of items, so let's just start talking about it. It was clearly more than just the variant yesterday, right? And we'll get into this because, like I said, I've got a laundry list of things we need to talk about in terms of what caused that change in investor psyche. Global stocks got slammed, as we said. Stock prices fell. Treasury yields in the U.S. rose, right? Sending yields plummeting. Oil traders were disappointed with yesterday's news about the OPEC Plus agreement, and they sold oil off 7%. This morning, Bitcoin, which has been teasing 30,000 for a while now, breaches 30,000, trading at 29.6 and most likely going lower. European markets and U.S. futures are signaling a change in psyche this morning. Buyers are scouring the landscape after the damage done yesterday. And what are we having for dinner? Well, we're in New England, so we're having New England clam chowder with fresh picked clams right out of the ocean behind me. Look, this morning, the headlines say it all, right? The Dow tumbles 700 points for the worst drop since October as investors fear a COVID resurgence. That was from CNBC. The Dow slides 700 points on virus worries. That was the Wall Street Journal. And Bloomberg runs with this headline: stocks slump as virus fears fuel a rush into bonds, right? Okay, all very dramatic. But is it really the COVID variant, the Delta variant, that really ignited this sell-off? Look. It was Sunday evening in America, which is Monday morning in Asia yesterday, right? Investors suddenly got all worked up. The Delta variant causing investors in Asia to become a bit unsettled as it spreads across the region. And then the day dawned in Europe and stock futures were under pressure, right? It seemed that all the talk of the variant was all anyone could focus on. In the UK, citizens were out celebrating the end of the mask wearing, all while the new variant was catching a fire. Talk of a third round of the virus disrupting the global economy took root, and that's all stocks needed to hear, and they fell. Investors suddenly focusing on all the negatives surrounding another round of difficulty that the virus would create. Before you knew it, European indexes were down better than 3% across the board. And as the sun started to rise over the Atlantic and the streets of New York City in a post-COVID life came to light. Stock futures under pressure. Investors braced for what appeared to be another brewing storm. By the end of the day, U.S. stocks were down but not out. The Dow lost 725 points, or 2%. The S&Ps gave back 69 points. The Nasdaq choked on 153 points, or 1%. The Russell lost 32 points, or 1.5%. And the transports gave back 227 points, or 1.6%. The VIX surged by 22%. Oil fell by 70%, taking it back into the mid-60s. And 10-year Treasury yields plummeted to 1.17%. It was a mess, but it was not a disaster. But let's be honest, there's so much more to this story. Think about it just for 1 minute. We've got inflation concerns and now deflation concerns. We've got stretched valuations. We've got huge supply chain issues. We got very easy central bank policies here at home and abroad, and that's running out of options. We've got infrastructure and government stimulus issues. We've got domestic taxation. We've got global corporate taxation. We've got a new welfare state in America. We've got an OPEC Plus production agreement that was less than expected. We got a U.S. oil industry that's being choked by the current administration, helping to send oil prices higher. And we've got Press Secretary Jen Psaki revealing that the White House is monitoring and flagging problematic posts for Facebook that spread disinformation as they work together with all social media companies to identify misinformation about the Delta virus and the vaccines. I don't know, sounds like China to me. And then we have earnings, which have been expected to be stellar this quarter. And they have not disappointed so far, but they're also expected to be the peak earnings season, right? And that beat the number results are being met with actually aggressive selling and not with aggressive buying. And buyers are going to sit back and let it rip lower if that's what it wants to do. I mean, why would you pay $50 for something when sellers are willing to sell it to you for $47? As they say at TJ Maxx, why pay full price? And to boot, Random House announced that they're paying Prince Harry $20 million for his tell-all book. Oh boy, here we go. Anyway, and this all is what's causing money to pour into the treasury market from all corners of the world, sending prices up and yields down, all casting a pall over the economic recovery that we've all been celebrating, because falling yields suggest a faltering economy. Or does it? Let me ask you again. Was the clobbering we took yesterday due to the Delta variant alone? Is the Delta virus the only thing going on here? Nothing else to sow any seeds of angst or caution? There's absolutely nothing that anybody sees that could have contributed to yesterday's sell-off? And while I understand that the virus is an issue, I get it. I am not buying into the fact that it is the only issue, and I'm not buying into the fact that it was yesterday's issue at all, right? So what's an investor supposed to do in an environment like this? What do they do when the markets get really anxious? Well, the first thing you do is you don't panic, right? Don't go running for the door. Don't go calling up your buddy and say, hey, what the? And if you've been listening to the voice of reason, you've been prepared for this, right? We've been talking about this, and you're prepared for actually more to come. There is still more volatility on the horizon, so sit back. The last thing you want to do at this moment is panic, right? There's no reason to panic. Look at this. It is absolutely spectacular. And while it's a bit uncomfortable, remember, it's transitory. Nothing to see here, nothing to worry about. And while it might go on for a bit longer, just remember, it's still transitory. Who does that sound like? Right? Jay Powell, that commentary has worked for him. Investors have bought into that theme, right? It works for him. But it also doesn't mean you just sit back and do nothing. But it also doesn't mean that you hit the sell button on everything you own, right, to get out. In fact, I would argue, depending on where you are in the life cycle, that you go shopping. Put your list together if you haven't already done so. Get ready to back up the truck, because when the break comes, it's going to create lots of opportunity for everybody. But again, depending on where you are in the life cycle is going to kind of dictate how aggressive or not you're going to be. Now, look, from an investing perspective, you must be aware of what another round of the virus and the hysteria could do to the markets, to an already nervous and anxious global market. Never mind the role that all the other issues that I identified are going to play. I wouldn't build my portfolio around hysteria. I would be aware of it. I would position myself to take advantage of names that are going to get unnecessarily beaten up. Good names that will get slammed in the near term as asset managers use them as an ATM to raise quick cash. And that's going to cause some short-term dislocation in stocks and prices that, my friends, are going to create an opportunity for you. And this morning, European stocks and U.S. futures are what? Rally mode. Go figure. What happened to all the hysteria yesterday? What happened to the virus? What happened to the Delta variant? Suddenly, the Delta variant's a non-issue this morning? There's no specific news other than investors wondering if they overreacted yesterday. Was the dramatic moves lower just that? More drama? And while there's no economic data in Europe to speak of, investors are finding value amongst the ruins, right? Remember, those markets were down more than 3%. With indexes across the region this morning all up about 0.75% across the board as investors go shopping. And here in the U.S., this morning as the sun rises, Dow futures are up 200 points, S&Ps are up 20, the Nasdaq's taking back 75, and the Russell's adding 17 points. The VIX is down 5%. Oil, which traded right down to intermediate support yesterday at 65.65, has stabilized and is trading higher at 66.84, on its way back to the mid-70s for sure. The 10-year is steady at 1.17 as investors ask if the Treasury market is really suggesting a weakening economy, or is it suggesting a repricing of risk due to all the factors outlined in paragraph 3? I'm in the camp that falling yields are a direct result of institutions parking money into the safety trade as we meander our way through what is typically a seasonally volatile period for the markets. I'm not in the camp that the economy is slowing at all, but I am in the camp that it's not all smooth sailing directly ahead of us, right? And so therefore there's a reason that money would go into the bond market, right? Eco data today includes housing starts and building permits, expectations of up 1.2% and up 0.7% respectively month over month. And earnings yesterday did not disappoint, and I do not expect that they're going to disappoint today either, or even tomorrow, or even the day after that. In any event, the rotation continues. So there's no reason to change your whole portfolio at all. Stick to the plan, focus on the goal, and not on the short-term noise that everyone's hearing all around us, right? Bitcoin this morning broke 30,000, a level that we've been talking about. That's down 4%, and it's going lower, currently trading at 29,500. Ethereum's trading at 1738. It's also down about 4%. And Dogecoin's down 7%, trading at almost 15 cents a share. The S&P closed at 42.58, or 15 cents a coin, I should say. The S&P closed at 42.58, down 1.6% yesterday, after testing just below the intermediate-term trend line support at 42.40 to trade as low as 42.43 before rebounding. It's now down 3.5% since the all-time highs of last week. We could fall another 6% or so and still be within the normal trading bands, and that number, my friend, is 39.36 on the S&P. And while it would be uncomfortable, it would not be out of the question at all. Below that level would be in correction territory, which is identified as a 10% move off of the latest high. A level I don't believe we're going to see unless, of course, we get hit with something unexpected at the August Jackson Hole Fed meeting. Right? Something I don't think is going to happen, but that's potentially the really next big event that I see on the calendar, right? You know what you can do? You can always text the word invest to 21,000 to get my digital business card. You give me a call, download it to your phone. You can give me a call, send me a text, send me off an email. I'm happy to talk about the markets. I'm happy to talk about stocks. I'm happy to talk about a plan. You can also follow me on Twitter. My Twitter handle is just my name, @KennyPolcari. You'll find me there, trust me. So what are we having for dinner tonight? Well, look, like I said, I'm in absolutely spectacular Cape Cod. Now, look, I also grew up on Cape Cod as a kid, not on Nantucket, but I grew up on the mainland. But coming here is like, is like my happy place. It's like coming home again. Anyway, so we're going to make New England clam chowder. And we went out and we picked clams the other day. Some of you saw the pictures, right? We picked clams. We got a whole bushel full of them. I made linguine clam sauce. And now yesterday I made clam chowder for lunch. You can find the picture also on my Twitter. Now for this, you're going to need celery, you need onions, you need garlic, you need potatoes, which are diced into small cubes, you need minced clams, bacon, flour, 2 cups of chicken broth, 2 cups of clam juice. I made my own by steaming the clams to get them to open and capturing the juice, and I minced the clams to add to the clam chowder. You need butter, you need heavy cream. You can also put in red pepper if you want to give it a kick. I prefer not, but you want to give it a kick, you can put in the red pepper. Start by cooking the diced bacon in a large pot until it's all browned up and you've rendered all the fat. Remove about half of the bacon and set it aside. Leave the other half in the pot and now add a dollop of butter to the pot. Next, saute the chopped onions and the celery for about 10 minutes. You want to just stir it all around. Now add in the cubed potatoes, the diced small cubed potatoes, and the garlic, chopped garlic. Cook for about 5 minutes or so, but don't leave the pot. You need to keep stirring it so it doesn't burn. Now, after about 5 minutes, add in 1/3 of a cup of flour. Mix it all up, get it all coated, and now add in the chicken broth, the clam juice, and the salt and pepper. Bring it to a boil and then reduce it to simmer for about 15 minutes. If it thickens up too much, just add in the broth and clam juice in equal parts. Although I tend to add more clam juice because it's clam chowder, right? But you can add in equal parts, it's fine. Now, after that, let that simmer for 15 minutes or so. Now add in the minced clams and 1 cup of heavy cream. Blend it, take it off the heat, stir it up, taste it, season it, and adjust with salt and pepper if you need to. But taste it first because the clams can be salty. Serve this in bowls with the classic oyster crackers. Those the little oyster crackers. You know what they are, like they're little oyster crackers. Put those on top and then take some of that bacon that you've saved and sprinkle that on top as well and serve it to your guests. It is absolutely a spectacular dish, especially to have on a day like today. So welcome to Cape Cod. The day has just begun. Thank you for joining me. I'll see you tomorrow. Take good care.